I'm Greg Hunter. Welcome to USAWatchdog.com. With us, one of the greats in global economic finance. Of course, he has his world-renowned economic confidence model, which is very predictive. It's a theory of cycles. I'm oversimplifying it, but they're everything from 300-year cycles to short, matter of weeks or month cycles, and things happen in the world in cycles. We're talking about Martin Armstrong of Armstrong Economics. Martin Armstrong, thank you for joining us today on USAWatchdog.com.
Well, thank you for inviting me.
Good to have you. I know you just had your solutions conference. I want to end with that, about solutions to the mess we're in. I want to start with your prediction that your economic confidence model is coming up, that in September-October time frame, something big is going to happen in one of these cycles. How big is this cycle, and what do you think is going to happen in the September-October time frame?
Well, this is a turning point where every one of these business cycles, which are roughly about 8.6 years, it moves from one sector to the next. So it was like Russia back in 1998, and then you end up with the dot-com bubble. You end up with real estate 07, etc. So this one looks like it's going to be in the bond markets. It's the peak really in government. And you have interest rates going negative. So that you can't get much lower than that. So this appears to be the peak in as far as government is concerned in the bond markets. And from there, we're going to be turning down. We're in a lot of trouble with most of these governments. And, our models are really showing that by 2020, the amount of interest we pay to roll the debt constantly will exceed the entire defense budget. So this is pretty serious. Government is run by a bunch of lawyers. They're not financial experts. They could really care less. It's what do I have to do to win the next election? And that's our biggest problem.
What do you make about the Fed with the rumblings about raising interest rates, not raise interest rates? You have told me in the pre-interview that they're going to have to raise interest rates. What happens when they raise interest rates? Does the bond market fall apart? Does the housing market fall apart?
We're looking largely at the Fed will have no real choice. The capital has been moving over here. The stock market is holding up largely because of capital inflows from everywhere around the world. And you have, the Chinese coming over here buying up even all real estate. To the point China is now looking at putting in worldwide taxation like the U.S. So the Fed will come under significant pressure to raise interest rates because traditionally, the newspapers and Congress will blame them. Oh, you're creating a bubble with low interest rates. And, it won't be true, but the Fed will have to respond to that. And the more they raise interest rates, actually, the higher the stock market will go. I know that sounds crazy, but honestly, you just do a correlation of interest rates in the stock market. We're about where we were in 1927. They lowered interest rates to try and help Europe. Then the stock market started, basically went into a rally for about 2 years into 29, doubling. The Fed raised interest rates all the way up. It did not stop it. And when it finally peaks, then they lower interest rates, and then they chase it all the way down. And historically, interest rates bottom, at some point with the markets. You lose confidence, people won't borrow.
Aren't rates rising going to kill the Treasury market and kill the housing market along with it, or at least injure it pretty severely?
Bond market, yes, it will accelerate the problems as far as other foreign countries that have issued dollar-based debt. So the emerging markets will kind of get like Greece. So we have a real serious worldwide problem going on here. And it's mainly because, government has been, all of them, they just borrow year after year, and there is no intention of ever paying anything back. So, it's the craziest system you've ever seen.
What do you make of Jamie Dimon coming out and warning of another calamity? and people wanting to rush into treasuries. I guess this is kind of playing along with your thesis here. And he says that there won't be enough good collateral there'll be a shortage of treasuries, won't be enough good collateral. Is that because, the treasury bonds at 1.76% or whatever, 1.7% of 10 years will devalue and then they'll have to issue new bonds? Or why is he worried about the collateral? Because the bonds are going to be destroyed?
Well, actually, it's very interesting. The Fed bought in a lot of government paper. And the reason they were trying to monetize, they were trying to stimulate the economy, but it really didn't work because effectively, that's an idea that fails every time because it's very myopic. It assumes that all the debt is here domestically. And nearly 40% of the debt is held overseas. So China said, thank you very much, and they sold back all the 30-year bonds. So the Fed basically really put it on its books. So as far as treasuries are concerned, there's a shortage of treasuries in the sense that capital is trying to get out of Europe. The dollar is the only game in town.
What happens to foreign national companies that say, hey, whoa, we're doing half our business overseas. You can't let the dollar go any higher. What happens to those folks? I mean, that's a big swath of business.
They have to hedge. That's all I can tell you. I mean, their corporate profits will decline the same way as Germany is suffering right now. Switzerland adhered to that. Oh, you can't let the Swiss franc go up. They tried. They lost, 30% overnight, and the people that had put on the peg had death threats against them. So you can't. We have to have structuring. We have to get government out of the debt business.
What would happen with this big pile of derivatives? I mean, the Bank of International Settlement says there's, a quadrillion, 1,000 trillion of derivatives. And if, Europe gets in trouble, Greece gets in trouble, Spain, Italy, all these countries, could that cause a daisy chain of interconnected collapse of the banks? Are you worried about that?
You have the European banks will collapse anyhow. They largely forget the derivatives. They had to be politically correct. So they had a piece of every member's bonds and as if they were all equal. And that just didn't work. I mean, that's the whole problem behind the euro. The derivatives have, there's so much of it is offset against each other. They're hedges against other positions. And I think you're going to see the same thing that happened the last time. They'll just redefine them. And the banks that sold a lot of them will say, well, yeah, okay, fine. It was you're buying security against the default of Greece. And what do? They got out of it. They basically said, well, it was only if it was an absolute major default, not a haircut. So they clipped them.
Well, if they are forced, like you say, to raise rates, and other people have said the same thing, they're going to be forced to raise rates just for their credibility. Doesn't the housing market get killed? I mean, if interest rates go from 3.5% to 4% for 30-year money to 6%, I mean, doesn't the housing market just tank?
Well, sure. The average low end. I mean, the biggest problem you're going to have with that is that they're also talking about, ending the 30-year bonds or 30-year mortgages. So that will shorten it up and make the prices decline as well. Most of the real estate high end right now is not even on it. They're paying cash. They're just taking money and bringing it here and buying whatever they can. That's money trying to get out of the banking system and what we call off the grid.
When you say off the grid, they're afraid of currencies collapsing along with these bonds, correct? When they start raising rates, aren't currencies going to collapse? Some currencies?
Well, sure. I mean, this is what's pushing the dollar up. Most people don't realize that the dollar is the only real game in town. And then you look at Europe. Why is the DAX outperforming absolutely everything, yet corporate profits are declining? It's very simple. I mean, I got to do a 6-week tour there of Europe. Got to leave, next week. And you see the complete difference in the mentality there versus here in the United States. In the United States, we're still in a fog. Over there, they feel the pain. What are they doing? They're selling basically all the euro debt everywhere, and they're buying the German. It's not that they think Germany's fantastic. What they're assuming is that the euro is going to fail. And if they buy German bonds and the German stock market, when the euro breaks, they'll get Deutschmarks.
If the euro fails, could that implode the system with all these derivatives? I mean, there's a lot of leverage out there, a lot of dark pools of money, which that who knows what collateral is with whom.
I mean, that's more or less kind of like long-term capital management crisis back in '98 with all the bets they were making on Russia. It gets very, very complicated, and most of these, credit default swaps that they've done on Europe are going to be in serious trouble.
When you say this is a culmination of a 300-year cycle, that indicates something big. So do you have a date where this turn happens? You usually date it to the day. And then what does it look like for Americans? Is it inflation? Is it deflation? What is it? Is it chaos? What do we have?
Well, we're actually in a major deflationary wave, which is why you see interest rates going negative, etc. It's not well understood. One of the causes is that taxation has been rising dramatically. So the money that government keeps sucking out of everybody, that reduces economic growth. So you end up with more or less kind of like stagflation, where yes, prices have gone up, but you don't see it going up because of a boom in demand. Just people having to get by. So you have a deflationary aspect from that. You also have this sad part of trying to stimulate the economy by lowering interest rates. They only look at one side of the coin. At Christmas time, when I was out looking in stores, etc., the shocking thing was that most of the people behind the counter were gray-haired. They weren't teenagers. You are forcing the elderly out there because we've lied to them. Oh, save money. This is how you build for your retirement. Save enough. You'll have enough. How can you possibly have enough if they're not paying any interest?
So this 300-year cycle that you're talking about, it's going to be stagflationary or inflationary. Is that right? When this thing
first you get the deflation, and then you move to the inflation. All right, but you first have to go in one direction. It's kind of like a pendulum. It swings to the extreme, both sides. It's more of this is a culmination in real corruption of government, etc. I mean, one example, for example, you take Hillary Clinton. All right, she just said, oh, all her emails were erased from the server. Tough. Can you imagine if that would have happened back in the 70s with Richard Nixon and said, no, I'm not going to turn over the tapes. I erased them all.
Yes.
They would have dragged him out and thrown him in prison. It's a reflection of how corrupt the government has become on both sides of the aisle. Nobody's, a saint here. They're all the same way. And it's pretty bad. And so this is really... It's kind of like a bubble in the stock market, but just look at it this way. It's a bubble in government. They've gone too far, it's an extreme at this point. And you're going to see a lot more defaults at the municipal level. In Germany, they're already more than 50% of municipal governments are really bankrupt. You're talking about putting in a 15% surcharge tax to try and bail out municipals. I mean, this is a joke. You have police confiscating money from everybody for everything possible. The average confiscation ticket in Washington, D.C. is $20. The Washington Post came out with that. It's not that they're taking $10,000 from people who's a drug dealer. It's getting to the point like the cop needs a cup of coffee. Oh, that $20 it may have been having to do something with drugs. Give it to me. It's getting really, really bad.
So in this world where the government bubble pops, what happens to people getting a government check?
That's the big problem. You're looking at pensions, they've wiped out pension funds all over the place. Because the pension funds 8%. And that's the danger of civil unrest, etc., that our computer's been warning about, and the potential for a very serious, sharp rise in third-party activity for 2016
and so
at the presidential election level.
So you are forecasting more of a police state, more of a
they're
crackdown.
crazy. I mean, they're really, the government has gone too far, and we don't have any choices on either side.
So you're forecasting more police crackdown, more surveillance, more authoritarian type of police, more of the bad and less of the freedom and liberty.
When they're broke, they come after us. As simple as that. And we had, one of our staff members went to a meeting in Luxembourg. He's from our Swiss office. All he was on a train between Luxembourg and Switzerland. But it goes through France. Train is stopped. The French police get on. They are financial police, searching people's bags for money. Hoping that maybe somebody had 100,000 euros that they took out of a bank in Luxembourg and taking it off to Switzerland. Oh, it's ours, even if they're not French.
And let's
the French
talk about
are doing the same thing.
The U.S. is doing the same thing.
They're all doing it now.
So if we have this in stagflation, first deflation, then inflation, what happens to gold and silver and things like that? Well, I know you've been not a fan of your timing of buying them, and you caught some heat for it, but you've been pretty much right. You said it wasn't going to go up. You hold on, it's going to go up in the future. I mean, I'm paraphrasing. You said it wasn't going to go up. You've been right. So what happens for the people who are saying, ask them about gold and silver? What happens to gold and silver?
People have to realize everything is connected. All right? You can't have gold going to 10,000 an ounce and nothing else ready. It's all connected. What's going to make that move is what we're talking about. Gold does not rise with inflation. That's just a propaganda sales pitch. I mean, you can look at it. Gold was $875 in 1980. The Dow was 1,000. I think you would have been better off just buying the Dow. All right, but gold rises when people lose confidence in government. It has nothing to do with inflation. All right, so when you start worrying that government is not going to survive, who's going to win, stuff like that, that's when gold rises. So short term, we still have the risk of it going under 1,000. And that kind of shakes the tree and gets everybody, out. And then it's going to flip, but it's going to flip when everything is right.
Could it conceivably go to 10,000 an ounce someday?
I don't think 10,000, no. I think 5,000 is at max. But what is that 5,000? It's not. People, you say that, people go, oh, wow, $5,000, that in today's terms, look, it might be $5,000 at that point for a weekly salary or something. But you're really talking about a major reset coming. 300 years ago, that was the revolutions against monarchy. Today, it's really going to be more or less revolutions against a Republican pretend democracy, which is just not there.
That's the big reset. The political reset is coming.
Yeah, I mean, we do not have a democracy. Democracy is when people have a direct vote. All right, you vote on tax increases. No, that's what democracy. That's what it was all about. And Socrates was tried by 600 people. All right, that's a democracy. A republic is you are hiring a representative. He goes down and supposedly represents you. Now, just to give you an idea of this legal difference, actually, Obama does not have the constitutional right to raise taxes. So what does he do? The bill has to proceed in Congress. And this goes back to the king summoning the parliament. The parliament had to agree to be taxed. So that's why the bills are still coming out of Congress, but they really don't represent us. They represent government. They're so detached, it's crazy.
And finally, so would you be a holder or a buyer of gold and silver at some point? Because government's going to get more distrusted?
Yeah, I mean, I think your portfolio has got to be, include everything, not anything in by itself. I would be concerned on the gold side as far as more bullion is concerned. I would really look at like $20 gold pieces, things of that nature. You have to realize that if you walked into a Starbucks and you have a silver quarter, you know what it is. Is the kid at the counter going to know what it is? He's going to go, it's a quarter. So, you know, I think you have to at least stay with something that's at least familiar to the general public. The problem with gold bars and things of this nature, or silver bars, you know, they can be filled with lead or whatever, and who's going to trust it? So I think staying with at least recognizable coins is a little bit better.
And let's talk about your solutions conference. You know, your conference, I'm going to put a link up afterwards. It's 3 hours, so there's no way you can get it all in. But just a thumbnail of what the solution to this crazy, corrupt global system we have. What are just some couple of bullet points on the solutions? And if people want to buy the conference, they could do that afterwards. What's your just a couple of good big bullet points on solutions?
Effectively, we've looked at this. I've met with a lot of governments around the world. And we've been working on this for some time. There's only one way to solve all this, and that's basically it's going to be a reset. You know, it's a change in the monetary system, and how are we going to do it? And you can't just simply default. If you default, we're going to have blood in the streets. You're talking about all the pensions are going to be out there, government employees. I mean, in Roman times, the army just started sacking their own cities to get paid. So is that what we're going to be facing? You just can't possibly just say, okay, fine, we're not going to pay everything. Just cancel it all. It doesn't work that way.
And just a side note here, there's a lot of talk on the internet about China's going to come in and knock out the dollar, and the dollar's going to be devalued with the IMF and the new SDR 30%, or it's going to go way down. Is that your view? I know that the Treasury market and the dollar is a big, fat, deep, liquid market. Do you think that this fall the dollar could get devalued severely, or is that just people that don't know?
The U.S. would love that if it could, because effectively you lower the value of the dollar, then our exports would dominate the world. I mean, that's not, you know, people keep looking at currency as if it's a stock. And going up, they think it's bullish, and going down is bearish. It's the exact opposite. And the higher a currency goes, the less you're going to sell overseas. That's what happened in the Great Depression. That created Smoot-Hawley, protectionism. So
the dollar's not going to fall out of bed.
No, that's kind of absurd. I mean, euro is in terrible shape. The yen is in terrible shape. And honestly, you can't park money in Yuan yet, or, you know, Russian rubles. I mean, let's be realistic here. Eventually, yes. Eventually, China will surpass the United States economically. It still has some work to do. I mean, I was, you know, one of the first analysts, you know, summoned by China. So I went over there back in the 90s, and I'm very impressed with the way they're functioning, and I think they will do an excellent job.
But not this fall.
No, not this soon. Their move towards the World Bank and creating things, yes, that is a step in the right direction. And that will eventually force a new type of reserve currency system. But it's not, we have to go through the pain first.
And finally, just to overarching solution, your basic solution is government has to change. Government has caused this big giant bubble and this mess, and government has to change. Am I getting that right?
Yes. I mean, look, government is the biggest borrower in the entire system. It's competing with everybody in the private sector. So look at all the pension funds and elderly. They've lost their shirt. Okay, why? Because now government's in a position that really likes lower interest rates because they're competing with everybody. I mean, you can't say, you know, well, you better cut your spending, otherwise I'm going to raise interest rates. Okay, that's only going to accelerate because they don't respond. Is Congress going to say, oh, the Fed has to raise interest rates, so we should spend less, let's go back to a balanced budget? I mean, good luck.
That's going to be some freaky times when they start raising interest rates 1% or 2%. I mean, that's just, I know it sounds weird. Back in the 80s, it'd be no big deal, but 1% or 2% now going from 0 to 2.5% or 2.25% would be a big move. I mean, there's going to be people losing money, right?
Huge money. We're looking at a few percentage points, and you're going to blow the national debts of all these countries way out of whack. And that's what's going to force political change.
And then when people realize the governments are totally broke and they can't borrow anymore, you're saying that all that has to happen, gold and silver will be, ooh, we don't trust governments, boom,
Exactly.
buy something real.
We got to get to that point.
I got it.
It's not people saying, oh, look at all the unfunded. It's a small percentage of people looking at that stuff.
Yeah, we're not there yet.
It's the average person on the street that has to see it. When
Got
you
it.
get to that level, then it's time. But we're not ready for prime time yet.
Just to plug this thing, I'm going to put a link on. Your solutions conference was March 28th, so it's pretty fresh, and people can go online and buy it for about $100. Is that correct?
Yeah, I think it's like 95 or something. I'm not really sure.
I'll put a link on afterwards. Martin Armstrong, Armstrong Economics. You never disappoint. Love your brain. Love your analysis. I mean, you are hired by governments and by hedge funds and big hitters, including the United States of America. Thank you, sir, for joining us today on USAWatchdog.com.
Oh, it's always a pleasure.